Okay, so welcome back. In this segment, in this video, we're going to be talking about Forex, and in its simplest terms, what is it? We get a lot of people asking us, what exactly is Forex and how does it work? Forex is the foreign exchange currency market, which means we trade in currency pairs. So to give you an example, one currency pair that we could trade is the Great British Pound against the US dollar. Okay, now many of you, if you've been on holiday, especially if you've been to America, you've actually taken part in the foreign exchange currency market, probably without even knowing it. You've traded one currency for another. So let's say you go to the States and you've got £500 and you want to convert that into US dollars for some spending money. Now, at the moment, the exchange rate as of today is roughly £1, one British pound, you would get 1.3289 US dollars. So if you went to a foreign exchange currency broker, you can go, they have them in the supermarkets now or at the airport, and you took your £500, you would receive $664 in some sense for your £500. Okay. Now, let's say you go on holiday, you've got your $664, but for some reason you don't spend any of it. You come back, you're in the airport, and you want to convert this amount of money, these dollars, back into pounds. And while you've been away, this currency pair, the exchange, has changed. So now, £1 will get you $1.3100. So that's $1.31. Okay. These two decimal places here, this last one, here and here, these are what we call a pip in Forex. And what is a pip? A pip is a percentage interest point. So when this goes up, so if this went to 13290, that means the value of a pound against the dollar would have gone up by 1 pip, and we would make money on that depending on the lot size, which we'll talk about in another video. But that is how you make money in Forex. You're looking at the probability of a currency going up in value or down in value. If you get that right by a certain amount of pips, that's how you make your profit. But going back to this, so you can see how in just normal life the Forex market is working. You want to change your $664 now back into pounds. The value of the dollar has gone down, as you can see. It's now 1.31. So when you change that back into pounds now, you would get £506. So you can see you'd have made £6 profit by not spending any of those dollars while you're away. You've just gone away, time's elapsed, the exchange rate has changed, in this case in your favour, because you want to transfer it back into pounds, and you've made £6. And that's what the Forex market is. It's currency pairs. So you have the pound against the dollar, you have the dollar against the Japanese yen, you have the dollar against the Swiss franc, and these are the symbols that you'll see. And that's all it is. And the way we make money, if we draw a chart here, we've got time across the bottom there, and then we've got the value of the currency. And so you will see charts like this. Yep, price going up, down, sideways, up. If you bought the dollar at this price and sold it up here, that might be the difference. Let's say 100 pips. If you're making £7 a pip, you see there you would have made £700 profit. And that's very doable in one day. The price can move 100 pips, 200 pips, sometimes you might only move 50 pips. And the art of Forex trading and being part of the 5% who know what they're doing is learning how to read these charts. And it's not about luck, it's about probability. When the market goes in a certain trend or it follows certain patterns, there's a probability, a high probability that it will do the same again and again, and you can look back in history at this behaviour. So if we think there's a 70% probability of the price going up, we would go long on that currency pair. Hope that helps you understand what Forex is. Please subscribe on the red button below so you can see the other videos that we do. Thank you.